Welcome to Money Guide TV. Today we're talking to Andrew Lane, who's the founder and CEO of Acuity Trading. Now, Acuity Trading is a signal provider and technical analysis firm that integrates with brokers, and also you can subscribe directly if you're a market professional. So we're going to have a chat with Andrew and find out a little bit about him, his business, and how it can help you with your investing and trading. So, Andrew, thank you very much for having a chat with us today.
Thank you for having me.
Um, we've actually just been through the whole Acuity platform and had a bit of a deep dive inside. And obviously, I've been following you for years, but I think it would be nice to hear a little bit about you and your sort of journey of running a company in the financial services industry. So why don't you just tell us a little bit about how you got started, what your background is, and how you fell into Acuity.
So I think I've always been a bit of a news junkie ever since I was like 10 years old. I used to read financial newspapers and stuff even at a very young age. My dad would encourage me, would have all the Sunday newspapers stacked up, and I'd read through them, and I was fascinated by companies and stuff. And then soon after university, I looked to get a job in financial markets, and I came across a job at Dow Jones and the Wall Street Journal, where I worked in sales, and I I was just fascinated by the process of news and how um, news operations around the world worked, whether it was Reuters, Dow Jones, or Bloomberg, or a newspaper. And I was very lucky to be posted to Madrid in 2005, and then I got involved in many other projects within Dow Jones and the technology around news. And also because it was a smaller office, I was sat next to the journalists themselves at the Wall Street Journal as they published and they spoke to their sources. And it was just an incredible experience I was very lucky with. And then later on, I moved to Barcelona, and then the financial crash happened, and the company Dow Jones took a change in direction. And at that point, I left, and I decided to start Acuity. And from the outset, it was very much a news-based company. What what kind of technology can we put around the news to make news more valuable? And news has changed a lot over the years because of um, sorry, there's fireworks going on outside there. Hopefully it's not too loud, but
Go ahead.
um, um, so news has changed a lot over the years. If you think about the volume of news has changed, but also the speed in which people, traders, use that, and that's really interesting. And now the data science we put behind it, and we look at sentiment, and I've been working in what we call news analytics, sentiment analytics for last nearly coming on 20 years, probably 18, I would say. And Acuity was started 10 years ago, and so that's the founding of Acuity. We looked at the data around news and what we can extract using machine learning and stuff. And now we've got ChatGPT, which is very much an evolution of where we started off, and we've encompassed parts of that and other stuff. And our data science team here in Spain has taken that to a new level, and it's way beyond just sentiment now. Um, but as a company, we focused right at the beginning in two different sections. So we had the institutional side where we serve hedge funds with data feeds and all the alternative data we provide, and then we have the retail side. And the company has evolved now with Signal Center, and now I would say we're a long distance away from our core of being a sentiment provider. We now provide multiple data sets in combination with Dow Jones. So we have sentiment news, fundamentals, technical analysis, research ideas, and we've got more data sets coming out every day. Um, so yeah, that's how the company has evolved in terms of the
And how many
product.
how many are you now?
We're coming on about 30 people now.
30. And that consists is that mainly analysts and data scientists? What's the
It's a good question. So we have our product data science here in Spain, and then we have our commercial hub in London with marketing as well. And then we also have the core of our analysts there. So we're very different. we have an automated background in sentiment, and we can provide lots of data that's automated. But our technical analysis with our analysts is very much a handheld product, and we have a team of analysts that provide trade ideas
Okay.
on a daily basis.
So just thinking like anecdotally, like
Yeah,
looking at the company and and over the years you've running it, what's been the biggest wins? Have you got sort of an anecdotal example of, one of the biggest wins where, practically you've helped traders perform better? What's been the biggest wins and the biggest lot and the biggest losses? And losses are always
I'm
interesting.
gonna I'm gonna answer that on two different levels. First, at a company level, then as you say on a trader level. The
Yeah.
biggest win for me was my first contract,
Yeah.
um, and I remember getting that in and going down with a friend and having a bottle of cava here in Spain and celebrating.
Who was that with?
Uh, it was a broker in the Middle East
Okay.
who are still our clients. So yeah, that was a big win. And the biggest losses, I haven't, and we've carried on growing, so there haven't been big losses. But I would say probably the biggest losses, certain people have left the company and moved on to greater things. You when you build a company, a small company, it's very much like a family, and you've got to let your it's almost as though you want to let your children out and find
Yeah.
their own way in life. And when you see people coming on board at the beginning and then they go off and into the wider world, it's a very sad a loss for us, but it's also nice to see. And then on a trading level, when you see sentiment rising up ahead and seeing data sets, I would say actually I've got the biggest win for us, which is slightly different to what you're aiming at, was our ability to predict GDP in the last 2 quarters. We have this data science project here in Spain that looks at something called an unsupervised topic model, which is looking at underlying topics within news over the last 20 years. And we use the attention of those topics to understand what is moving certain things. And in this case, we did a research paper, which will be published soon, on predicting GDP in the US, and it was a lot more accurate than anyone else out there.
Okay. Wow. And GDP. Anybody looking at GDP, what do you think are the biggest markets that move around that? So if you're looking to get an indication of where GDP is going, what should you be trading around that, do you think?
I would say US stocks, definitely US led. And I think you then see with the US growth, there's a lot of talk about inflation at the moment. The last few figures, the US is growing a lot quicker than they expected, and therefore, central bank was expecting to stop their tightening because growth was going to come down, but yet it's carried on going up, and therefore, inflation is still coming down, but will it continue to come down with those kind of growth figures? And therefore, if I was looking at trading stocks, I'd be looking at companies or stocks that are most affected by interest rate decisions and such forth.
Okay, and that's the win. So tell us about any disasters that I mean, this isn't a stitch up. I'm not asking for, where have you gone horrifically wrong. It's, it's like, what's the biggest lesson you've learned? What have you has something happened on the platform where you've just gone, no, that's a mistake, and then you've turned things around?
I'll tell you something very different, which will interest your readers, is global warming and
Yeah.
how that affected my company and the use of my platform. Some years ago, I think it was maybe 7 years ago, or so, we were producing our data, and we had this really warm summer, and especially up in the Nordics, and we were using a server up in the Nordics, and I didn't realize at the time we were in Sweden that Sweden's largely powered by it has a huge nuclear power, and they suck water out of the sea to cool their reactors. And the sea temperatures went up so much they couldn't suck the water out anymore because it wasn't cooling it enough. And therefore, they had to shut down the nuclear reactors. And therefore, my data center that I was using got shut down. And therefore, my product got shut down. And it was an
Right.
amazing knock on that my investors couldn't see what was the latest sentiment on Apple because of global warming.
Yeah. There's got to be a trade around that
Yeah,
somewhere. as well. I think that's a great story. I think one of my favorite. I can't remember who I was talking to. I was talking to someone who runs a similar business, and it was about the analytics of Steve Jobs' private plane. I'm sure you've heard this story, but it was
No.
there were hedge funds tracking Steve Jobs' private plane, and they tracked his private plane to all the headquarters of the cellular networks in America, and then from that analysis, they then thought, oh, do you know what? He's probably going to bring out an iPhone. So they all bet big on Apple Apple stocks. There's definitely got to be a nuclear trade around. There's got to be a trade around
Nuclear
nuclear.
trade.
Yeah,
Yeah, there's all sorts of
and
wars
global
that,
warming.
that
I mean, maybe that's some analysis, some correlation between sea temperatures and the cost of electricity and the firms that profit from it. That would be an interesting trade. Okay. And so we're a little bit over, but let's just go through top tips and then we'll do a couple of quick fire questions. But so top tips for anyone who wants to set up a firm in financial services industry. And also, I know you said you didn't want to do it, but your top tips for investors as well. What's the one thing investors and traders should look at in your mind in the market anyway? So
okay.
to
So I'll
anyone who
start
wants to set up a firm in
with
financial services.
with the market. I won't. I would say definitely US. Keep away from European stocks, and I think the US is going to do a lot better than it thinks it's going to do, and therefore anyone that not necessarily focused on consumer spending, but companies that are focused um, that will benefit from relocation of jobs back to the US.
Oh, so you're saying, buy US, sell Europe. Is that because European stocks are harder to trade, or you just think the US is going to outperform?
I just think the US is going to outperform.
But what about from a strategy point of view? You're obviously integrated with a lot of brokers. You see a lot of traders. I don't know if you deal with traders or market professionals direct, but what's the sort of do you see mistakes that traders make in their strategies that you think they shouldn't be doing, or something that you think traders and investors should do?
Well, I think the biggest thing is that some investors cross over to being traders and vice versa, and not realizing the difference in what they do. But I would definitely talk from an investor perspective. I would look at um, taking ETFs that are going to help with that strategy, building around a strategy. And I would diversify the risk, not go into individual stocks. So I would definitely do ETFs that look into prevailing inflation, look into more growth in the US as more jobs come in. And I would also look into, for example, the stocks that are going to win, or an ETF that can help you invest in India and the countries around that. And yeah, I would be continuously short on European companies, but not necessarily the euro, because the euro is going to continue its tightening with interest rates, and therefore you could see an appreciation of the euro.
Okay. Oh, that's interesting. Well, I'm a natural bear, so I always like a short. I always like a short tip. It's weird. Like I'm an internal optimist in life, but a natural bear when it comes to the market. I don't know why. But anyway, top tip for anyone. There's new companies setting up every day in the financial services world, and operating in a regulated environment. It's serious business. So, any top tips for aspiring financial service entrepreneurs?
Yeah, I would say it's actually to do with any company. First of all, owning your own company is a roller coaster.
I
You have to
can
go up
I
and
can
down.
I concur with that.
Yeah.
Yeah.
I think sharing the journey has been very good for me. I have a business partner. That's a good tip. I don't know if you share your company, Richard, but sharing those highs and sharing those lows can be beneficial to the soul of the person. In starting your company, whether it's financial services or not, it's definitely one for myself. It's almost like what my teacher said. You just got to, when writing an essay, you just got to start writing, and understanding that the first iteration of your essay, the first paragraph is going to be blibberish, rubbish, and then you start coming down, and then you once you've written the conclusion, you come back to the beginning and rewrite the start. It's almost the same with a company. You got to start just with something to get going. The amount of people who say to me, "I would love to do my own company, but I have no idea what." Well, just get out there and do something.
Yeah, that's the thing. Okay, great. All right, no, good advice. Good advice. We've got about a minute left, so do you want to do some quick fire questions, and then we'll go for a book recommendation.
Okay. All
So
right, go for it.
basically, just first thing that comes to your mind for a bit of fun when it comes to analysis, fundamental or technical.
Ooh, I'm definitely in the field of merging fundamentals with technicals, but I guess if you had to choose between the two, technicals.
Okay, if you're thinking about investing, stocks or indices.
Definitely indices,
Okay,
spreading the risk.
we can lump ETFs into that as well. Crypto, we can't not talk about it. Boom or bust.
Ooh, it depends on it. The utility is interesting. But it is a bubble,
Yeah.
and
Do you know,
I've always been bearish on it because especially what the crypto, because I can't see how banks will allow that responsibility to pass from them to someone else.
it's funny. I can only see it working if it's heavily regulated. But then if
Yes.
it's heavily regulated, then it becomes pointless, and you just can't argue with sentiment. But there is a use case for some of it. It's like it's an interesting one to follow, and you can see why so
Yep.
many people love it. Right, taking on board analysis, written or video.
Uh, Definitely video because I have ADHD.
Okay. Oh, I've got that as well. I think it's interesting actually when you're talking to business owners, they all seem to have ADHD.
I only found out 2 months ago,
Oh,
and
really?
yeah, got
My wife's been telling me for ages. How did you find out?
I went to a psychiatrist and got tested.
Okay. Right. Okay. Okay. Final one. Sentiment, leading or lagging indicator.
Well, it's definitely a leading one because so many hedge funds use it. But I think the misunderstanding is whether you could use it on its own or how you make use of sentiment is the issue. So it's definitely a leading one, but um, probably for a retail investor is combining it with other data sets to make a more informed decision.
Of all the resources that are available everywhere, of course, with the exception of Acuity, where would you recommend that investors and traders go for their news? What's your sort of favorite publication that helps you out with what's going
Well,
on?
the one I read most, the two I read most, the Reuters website and the FT because I think they give a very unbiased perspective. They have no politics involved, whereas other newspapers have politics, and I think the FT has a much more European focus, which is good for me as well. And Reuters is a great resource and it's free of charge still, whereas if you look at Bloomberg, you have to pay for.
Okay, so stick with the classics.
Yeah.
Actually, I've got one more quick fire question for you. Social media finfluencers, a load of rubbish or any good ones?
So, Finfluencers is basically, I guess we're talking about the meme stocks, and this is comes back to the older days. Buy the rumor, sell the fact. And when I used to work in newspapers, it's very much like the Wall Street Journal. We'd phone up and speak to people and confirm the fact that someone had put out a rumor, and we would confirm or deny it, and then the market would react when we denied it, but it would also react when the rumor came out. And that's the same, we saw with the meme stocks, people buy into it because other people are buying into it. And then something happens that's more serious, adult, and it crashes.
Okay. All right. Well, Andrew, thank you very much for your time. It's really some insightful stuff there. Thanks for having a chat.
Thank you very much.